Good afternoon, everyone. My name is Joe Philipsz. Hope everyone can hear me now. I'm part of the origination team for the 3Cs Initiative Fund at Amber Infrastructure. I've been in the brief introduction to myself. I've been in the infrastructure world since the early 90s, before it was really an asset class. And I joined Amber in February 2020. But have worked with the team for quite a long time at my previous fund, where we made investments alongside Amber in Tideway, which is the UK's biggest construction project, and Cadent, which is the UK's largest gas distribution network. So today I'm here to give you a brief overview of the 3Cs fund and its objectives, and to tell you a little bit about Amber, who are the investment advisor to the fund. So first of all, Amber, we were appointed as investment advisors to the 3Cs fund in end of February 2020, and we are a specialist infrastructure fund management firm. We have around 4.5 billion euros under management, and we have offices in UK, Europe, Australia, and North America, a team of over 135 people, and infrastructure projects through construction and into successful operational phase. And we, as part of our appointment as the investment advisor to the 3Cs fund, we have opened offices in Warsaw, Prague, and Vienna to support the activities of the 3Cs fund. As you can see on this slide, we have, as I mentioned, we've got offices all over the world, although we are London headquartered. I think the most important thing here is that we are able to draw upon the skill and the experience of the people around the world in deploying capital in the 3Cs region. And I think that's very important, because I think the 3Cs fund will play a seminal role in the development of an active infrastructure investment sector in the region as part of its convergence with the rest of Europe. So let's move on to the 3Cs fund itself. I think this is why everyone is here today. So the 3Cs fund was established as part of a political initiative between 12 member states of the EU, located between the Baltic, Adriatic, and Black Seas. And the whole objective of that political initiative was to improve cooperation and connectivity in the region as it converges with the rest of Europe. There remain some significant gaps between this Central and Eastern European region and the rest of Europe, which are narrowing rapidly. So that was the background. The fund itself is a subset, if you like, of that political initiative, and has been established as a commercial infrastructure fund. It's designed to raise capital and deploy that capital within the 3Cs region to improve connectivity and to help address the infrastructure gap that exists with Western Europe. The fund itself is a Luxembourg CCAV RAIF, and we are Amber, the exclusive investment advisor. The fund has raised capital from a significant number of countries within the region, initially Poland and Romania in February this year. Estonia and Latvia joined in September, and of the remaining countries, we expect another 5 to join by the end of the year, which would give us about €1 billion of capital for the fund from the countries. The fund is also open to development finance institutions, and I think everyone is aware, or may be aware, that the US government announced in March, April this year that they would make a commitment of up to €1 billion $1 billion to the fund itself. And then finally, we intend in 2021 to raise private capital for the fund. So I think that has been a very, very rapid development of the fund over the course of 2020. So what is the fund here to do? Well, first of all, we have a target size of 3 to 5 billion. We are here to make commercial investments to help address the infrastructure deficit, which is at least, in my view, at 500 billion euros between now and 2030. And that deficit is compared to the rest of Europe. We're targeting returns of low to mid-teens, and we are investing in assets in the 3Cs region in energy, transport, and digital infrastructure. The whole focus of the fund is to create new infrastructure assets. So we're not a secondary fund. We're there to make investments in greenfield projects or to provide capital for expansion or modernization of assets. We typically invest between 50 and 250 million euros per project, although we can increase that through co-invest. And I think it's important to say that we are all our investment decisions are made by an independent investment committee and not by the shareholders of the fund. So at the moment, we have actually made our first investment, and I'll cover that later in my presentation. To summarize, therefore, this is an infrastructure fund investing in transport, energy, and digital infrastructure with a focus on asset creation, either through greenfield investment or by way of providing capital for the modernization or expansion of existing assets. And the investment decisions are wholly commercial and made by an independent investment committee. The advantage the fund has in some ways is that as we have the significant number of the governments engaged, we have had very good access to priority projects within the region, and I'll come on to that later in the presentation. Before I do, let me just address one issue, and that is COVID-19 impact, because we're always asked this question. We were appointed at the end of February, beginning of March 2020 as investment advisor to the fund when it reached its first close. Probably the timing was less than ideal in respect of building pipeline and making investments in the region. However, I think there have been some positives as well. One is that I think that there is an increased focus on infrastructure as a tool to help the recovery from COVID, the economic impacts of COVID. And I think that has in some respects accelerated new opportunities for the fund and ensured that the various parties we're engaging with are particularly interested in engaging with us to deliver new infrastructure as quickly as possible. I think the other thing, which is not on this slide, is we've seen an increase in the demand for investment in digital infrastructure. Again, I think part of the rationale behind that is the expectation that although many of us are working from home at the moment, post-COVID, that won't necessarily change. And there's a focus on connectivity in a digital sense and resilience within the IT systems, which we all use on a day-to-day basis. So notwithstanding COVID, what we found is that we've managed to have engagement within all the countries in the region. We've managed to open 3 offices in the region. We've reviewed over 100 pipeline opportunities, and we've made our first investment. So notwithstanding the challenges, we believe that it hasn't slowed us down, and in some respects has helped to develop the pipeline for the fund. So what I'd like to do now is talk in a little bit more detail about what we're trying to do and how we're doing it. So first of all, the opportunity. The region within which we operate is a very significant region. There are some statistics on this slide, but I think what's most important to me is the fact that there is around 25% of the EU's population within the 3Cs countries, and that the average GDP growth historically over the last 5 years has been significantly higher than the rest of Europe. But I think more importantly, we expect that trend to continue for some period of time as the region converges with the rest of Europe on a number of measures. And that infrastructure is a key part of that convergence. And that convergence is not just about hard infrastructure, but it's about the finance that's available to deliver infrastructure investment. And I think that is particularly important. The point I've made a number of times is that what we see is that there's a significant pool of capital available for investments in Western Europe, but the amount of capital that's available in Central and Eastern Europe is much lower, and the cost of that capital is higher. So convergence, I think, means not just convergence in respect of the actual physical infrastructure, but convergence also in respect of the capital that's available and the cost of that capital. I think that's particularly important to the fund. So we see a massive opportunity in the region. I think I've managed to break my screen sharing, but let's see, hopefully it'll carry on working. So let's turn to the sectors within which we operate. We operate within transport, energy, and digital infrastructure. What do we mean by that? And where are we focused within those? So the first thing is there are some key themes that cover all of these sectors. The first is that what we're interested in is improving connectivity. We're interested in security, I'll come on to that, and we're interested in, as I say, convergence with the rest of Europe in terms of the availability and standards of infrastructure investment. So historically, north-south connectivity, physical connectivity in the region has been poor, and that was, I think, one of the starting points for the 3 Cs initiative, was improving north-south connectivity. Now, within these sectors, within transportation, we have a very broad mandate. It covers road, rail, it covers rolling stock, ports, inland waterways, and airports. Very broad. And what we've been looking at here is investments that help fill the gaps in that physical communications network between north and south in the region. And particularly at the moment, we've been focused on rail, although we're broadening that and looking at inland waterways and to some extent roads as well. So broad mandate within transport infrastructure. Within energy, again, a broad mandate, although there are certain things we cannot do. We can't invest in coal assets and we can't invest in nuclear, but we can invest in all other forms of energy infrastructure assets. So that includes, for example, renewable generation, networks, both gas and electricity, gas generation, and district heating, to name but a few. Part of the energy mandate is to increase energy security within the region, and that's one of the reasons why gas is in there. I think that gas has got a strong part to play in the transformation of the generation assets within the region. There are a number of countries that are particularly reliant on coal, and I think as part of a transition story, we're going to see gas replacing coal, as well as significant investment in renewables. So energy is a key part of our mandate. And finally, digital infrastructure. So as I said earlier, there's an increasing demand for digital infrastructure globally. There's significant capital available, and within the region, we've seen that happen as well. We see our focus within digital infrastructure as fiber networks, improving connectivity, data centers, improving the ability to access and secure in IT assets within the region, and the rollout of 5G. And part of both energy and digital infrastructure is security. So I think it's very important within the region that energy security and digital security are key considerations in the infrastructure asset class that we look at. Moving on, how do we find our investments? Well, we have two sources of investments, and I mentioned this a little earlier. We have what's called the priority pipeline, and we have broader opportunities. The priority pipeline are projects that the various governments within the 3 Cs region have nominated as being of strategic importance to them and other countries within the region. Now, those priority pipeline projects are not solely for the fund. These are sometimes they're funded by EU structural funds, sometimes they're funded by the governments themselves, and sometimes they're funded by private capital. In our case, what we are doing is we are reviewing those priority projects as they arise, and those that are commercial we can take forward and consider funding, equity funding from the fund. And at the same time, we're also developing our broader infrastructure pipeline through local market engagement, attendance at conferences such as this, and discussions with advisors and project sponsors within the region. And because we've managed to open 3 offices in the region, we've been fortunate that we have been able to hold a significant number of in-person meetings around the region in most of the countries in the 3 Cs. I think I've spent, since mid-July, I've spent 4 weeks back at home here in Edinburgh, and the rest of the time within the 3 Cs region. So that has been very positive. And then what we try and do as we develop these pipeline opportunities is build partnerships for project delivery. As I said, we have a long experience of taking projects from the construction period all the way through to successful operation. And one of the key things there is to build partnerships with all the parties that are involved in those projects to ensure that we deliver what is required on the ground, both in terms of the physical assets themselves and the returns for the investors in those projects. So we have a very collaborative and partnership approach to these to the investment pipeline. Moving on to the next slide, what I'd like to do is point out where it is that we will get involved in a project. So we are, as I said, a largely greenfield or asset creation fund. So what we don't do is we don't take single asset development risk on the left-hand side here. What we're looking for is projects that have been well developed and are close to construction, and that's the point at which we'll invest. We will consider some development risk as part of a portfolio within a business, but really our focus is on creating new assets at the point when they're permitted or largely permitted and able to begin construction. I think one of the other key things there is that we want to deploy significant amounts of capital, and generally in the development stage, with the capital requirements are relatively small. So as those capital requirements ramp up close to construction, that's when we wish to engage as the fund. We will, of course, talk to developers earlier on and give them guidance and advice on what they need to do to their project to make it investable from our perspective. So we will engage, but we won't provide capital at the development stage. I should say that the fund is a 15-year fund, so it's a relatively long-term horizon, having made an investment, and it is possible for the fund to be extended by up to another 5 years if the investors so decide. So I'm very conscious of time, so I'll go through this quite quickly. What I'm doing here is simply summarizing our approach and what we expect to see in place as part of an investment review. So we want to know with some degree of certainty what the construction and operating costs are. We want to know what the regulatory regime and environment is, and how well versed the local partners are in that. We want to understand the forecasts and how firm they are. We want to understand what type of risk we're taking, whether it's availability risk, GDP risk, demand risk. We want to understand the permitting environment and the and where revenue is generated through either offtake agreements or concessions. And then we have a significant diligence program covering technical operation, environment, and regulatory diligence, as well as looking at the commercial diligence and the competitor market analysis. So these are all the things we want to see at the point at which we make an investment. And therefore, it's very important that we're not backing ideas here. We're investing in well thought through, highly developed professional projects or businesses. So I'm going to, I think I've got 3 minutes left. So I'm going to talk about our first investment, because all the rest of this is highly theoretical. Let's talk about something we've done. 2.5, 3 weeks ago, we signed a deal to acquire 100% of Cargo Unit. Cargo Unit is the largest independent locomotive leasing company in Poland and the 6th largest in Europe. You might ask, why did we buy a large and existing rolling stock business? Well, the answer is, as I said earlier, what we want to do is deploy capital that ties in with modernization and expansion programs within the 3 Cs region. And within Poland and the broader Three Seas region, you've seen very significant public sector investment in rail infrastructure, so mainly track and signaling. So in Poland alone, 13 billion has been invested over the last 5 years, and over the next 5 years, another 13 billion will be invested. And as part of that, what we see is that many of these locomotives operating on the networks are old. The average age of the fleet for cargo units is something like 44 years. And the fleets need to be upgraded to keep pace with the infrastructure investment in the track and the signaling, and also to improve the speed with which freight moves along the north-south corridors, and also provides rolling stock that can operate cross-border rather than having to stop at each border. And that strongly supports the move within the EU to try and put as much freight on rail as possible and reduce emissions by removing it from roads. So we saw this as a fantastic opportunity to acquire a very significant business. And to put it in context, we will be investing about 300 million euros, having bought the business, in buying new rolling stock and expanding that business out of Poland and into the neighboring countries. So this is what we call a platform investment. It allows us to make an investment now and then deploy capital on the ground very quickly, which is wholly aligned with the overall objective of the fund to create new assets and support the development of infrastructure in the region. So this is our first transaction. We are very hopeful that there'll be an announcement later this week on our second transaction, which will be a digital infrastructure investment. So that I'm going to finish there. On the screen, I'll leave you with some key contacts. We are very happy to engage with advisors, project sponsors, and other funds within the region as part of our 3Cs mandate. And I think I've managed to finish almost exactly on time, according to my watch. So thank you very much for your time this afternoon.
Great, Joe. I'm back on here with you. How you doing?
Hi, Tom.
Thank you for that. A couple of questions. You seem to have done a wonderful job of getting the governments on board on the public sector money. Now, I suppose, is the next round of getting the private sector guys to come in. Who might those type of funds be, and are they geographically concentrated in Western Europe, US? Are they pension funds? Are they sovereign wealth funds? Who is it?
Yeah. Okay. So from my perspective, the first investors in the fund are the governments, and I think by the end of the year we'll have 9 of the 11. Then what we expect is some of the development finance institutions to come in as well. We are engaged with USA-CEE, as I think I mentioned. And then we're beginning to engage with regional pension funds. So it's really pension funds and life insurance companies who are primary targets. And they are beginning their engagement now. Our view was that we needed to get all the countries in, and then we needed to make an investment, and then we could have sensible engagement with them. So that's where we are today, beginning to engage with pension funds and life assurers in the region. And then we'll broaden that out globally over the coming months.
Okay. And maybe I missed that, is from the perspective of the regional, I mean, are they UK based? I mean, are you looking for Japanese, Emirates? I mean, what is do you care? US pension funds?
Yeah. So I think it's all of the above. So we've engaged with pension funds in CEE. We've engaged with pension funds in the UK. We've engaged with some of the sovereign wealth funds in Asia and the Middle East. And we haven't yet engaged with the US funds, but we will be doing so later in the year.
Okay. And in terms of other projects, I mean, the big projects we see, of course, in Poland is the Solidarity Airport project, which I assume would love to have you guys get involved with that. There, of course, I would imagine some big question marks, at least major hesitations right now around that project. What other types of, I mean, do you see long-term structural threats to infrastructure projects that would have been sort of easy to contemplate pre-COVID versus post-COVID major airport projects for the next few years might be really hobbled. And is there anything else that post-COVID, new types of projects, I mean, digital, of course, but touch a bit more on that, that might have come out of the COVID environment?
So I think, yeah, it is clearly the case that airport projects are somewhat challenging at the moment. And we have had some engagement with the Solidarity Transport Hub, and we think it has huge merit, and we hope that we will continue that engagement, notwithstanding the COVID impact in the short term. It does make airports generally more difficult. On the other hand, it's an opportunity, because there will be clear winners and losers there. And if you can back the winners, then that's a good investment decision. In terms of other assets, what we've seen is really a focus on digital, as you mentioned, and I think I mentioned during my presentation, but also other transportation assets such as rail and inland waterways, where we've seen significant interest and opportunity. So we see physical transportation around freight as being particularly important.
Okay. And do somewhat forward-thinking projects, that's a kind way to say it, like Hyperloop, figure into your sort of world?
I suspect not for the current fund, because we have an investment period of 5 years, and I suspect many of these will be, looking for significant capital out with that 5-year period, but maybe for fund 2, you never know.
Okay. And the and last thought was on the digital side, do you all have in your mandate to be kind of a fund of funds where you might invest in so many venture capital funds investing in digital transformation, et cetera, not only, of course, in the region, but worldwide? Would you guys be open to a digital fund that might come to you and say, look, we want 10 or 20 million from you because we're going to invest in transformative new technologies coming up?
Look, our mandate is limited to investing in the companies and assets themselves. So we're not able to make fund investments. So we could invest alongside them, but we couldn't invest in a fund.
Okay, great. Okay, good. Well, I think we're more or less on time. Thank you very much, Joe. Where are you right now? Last time I caught you, you're traveling more than anyone I've met.
I was in Helsinki, I think, or Stockholm. I can't remember, but I'm back home in Edinburgh now. Okay, so good. Enjoying winter in Edinburgh. So, thanks, Tom.
Hey, you'll get no sympathy. We're in Warsaw. I mean, Warsaw in Poland, winter is not any better. Okay, Joe, thanks a lot.
Thank you.
We're going to take you off the screen, and thank you very much. Stick around if you want to have one-on-one meetings with Joe. Accept the invitations. I'm sure some guys will want to talk to you, but we'll say goodbye to you here from the screen. So we're on this, or we're on this?